U.S. PCE inflation, Fed Chair Powell's speech, BOJ meeting minutes, macro week ahead. Stocks are at risk as markets struggle to rebuild risk appetite after dovish guidance from the Federal Reserve. Stocks, gold and the U.S. dollar fail to find follow-through on dovish Fed guidance. Minutes from the Bank of Japan policy meeting might catalyze the Japanese yen. U.S. PCE inflation data and a speech from Chair Powell come amid market closure. Stocks rose, with the bellwether S&P 500 adding just over 2% and the tech-tilted Nasdaq 100 up nearly 3%. Treasury bond yields fell at the front and back end of the curve. 2- and 10-year rates declined 2.9% and 2.5% respectively. The U.S. dollar weakened against all its major peers except the Japanese yen, where the Bank of Japan was in focus. U.S. 2024 growth outlook goes from gloom to bloom in 6 months. Economists are decidedly more upbeat about the U.S. outlook than they were 6 months ago, seeing activity nearly on par with 2023 as strong job gains fuel consumer spending and growth without derailing the progress on inflation. Growth is projected to average 2.2% this year, more than twice as fast as anticipated in September, according to the latest Bloomberg monthly survey of economists. Odds of a recession in the next 12 months dropped to 35%, the lowest since July 2022 and down from 55% in September. Rates spark, starting the week with pushback. The dovish momentum of last week is starting to see some pushback. Supply and a likely still too hot core PCE reading looming on Friday can justify it. But they were well flagged and the consensus for the PCE sits relatively firm. It is likely that market conditions ahead of Easter and a long month end are behind some of the market movement. Global market funds assets under management grew significantly in 2023. Fitch Ratings London/Shanghai March 25, 2024, Money Market Fund, MMF, flows are set to stabilize in 2024 after significant inflows in 2023, Fitch Ratings says in a new report. Global MMF assets under management, AUM, were $9.9 trillion at end 2023, up 17% from the previous year with most of the increase coming in 2H23. Australia's consumer sentiment drops as rate cut prospects dim. Australia's consumer confidence fell in March as households remain concerned about their finances and the near-term prospects for the economy, with little sign interest rates are about to begin coming down. Sentiment declined 1.8% to 84.4 points with pessimists heavily outweighing optimists given a reading of 100 is the dividing line, a Westpac Banking Corporation survey showed Tuesday. The index has held below 100 since February 2022. Consumers are still deeply pessimistic and becoming more concerned about the economy's near-term outlook, said Matthew Hassan, a senior economist at Westpac. Responses over the course of the survey week suggest sentiment made another sharp turnaround following the RBA decision. Thank you.